First things first, my name's Rob Benow. I'm the program lead for the Energy Competition Task Force work that the Electricity Authority has been progressing with its task force partners, the Commerce Commission and MB. And we have Commission and MB people online as part of this discussion today. This session is focused particularly on the first of the initiatives we've put forward, which, as noted before, is particularly targeted at entrant generation and whether there is something that we can do to support, and by support I mean efficiently support as opposed to subsidise new generation into the market and more generation competition. With us today, people who've done a lot of the work on this is Ross Parry from Concept Consulting, and then Campbell, David and Lisa, who are Authority staff members, all of whom have been involved in driving this work forward. I'm going to do a little bit of an introduction, including some housekeeping, talk a little bit more about the purpose of the session, and also give you a wee bit of context. Then I'll hand over to Ross, who will talk through some of our key thinking and why we got to where we got to in the working paper, and then we're going to leave plenty of time for you to ask questions for any discussion that you want to have that will be useful to you. So, starting with the housekeeping, we are, needless to say, as keen as possible for this to be interactive and for this to be a useful session to you. So while we'll be doing a bunch of the talking early in the piece, we're very happy to take questions at any time. You're welcome to raise your hand, you're welcome to put a question in the chat, you're welcome to put a question into the Q&A. And certainly from my perspective, I'm happy to stop and take questions while I'm running as opposed to leaving them to the end. So if something comes up, please let us know. In terms of the purpose of the session, as you'll note, this is a forum partway through a consultation period. We are recording this forum. We think that's useful just in terms of making sure that we have access to anyone's comments or thoughts verbatim. That'll help us make sure that we can do the best job we can when it comes to thinking about feedback that we've got to then tuning our option set going forward. But the fundamental purpose of this forum is to help you make better written submissions at the end of this process. So please use this as a way to ask questions, to help clarify your understanding, to make sure that you are able to best submit on what is a really important topic in the context of New Zealand being in a scenario where we're trying to match increasing electricity demand and ensure that we're getting supply on board at the right time and in the most competitive way possible. In terms of then the context where this sits and why we've been particularly focused on this. So when we were thinking about this as a task force many months ago, initially in August, and then refining our thinking, we very much were looking at things in two particular ways. What are the immediate... Hey, can we just make sure that people are on mute, please? I can hear quite a lot of background chatter. Thanks very much. So when we're thinking about this, we were thinking about both what can we do immediately if we are seeing issues in relation to hedging, firming, those various different contractual arrangements where you get to support for intermittent supply from dispatchable supply. And that's reflected in this initiative, this PPA-based initiative, and also reflected in the Standardised Flexibility Product Initiative. They're about trying to make sure that there is availability and that we can, if need be, intervene or facilitate, or whatever the best way of doing that is, to ensure that the retailers, the new generators, and indeed the large industrials have access to the flexibility that they need. And then the other two initiatives in Package 1, the Virtual Disaggregation Initiative and the Level Playing Field Initiative, were seeking to look at, are there broader problems that we need to deal with, broader concerns about competition, broader risks, and those would then be complementary in terms of any interventions based on 1C and 1D to the availability type initiatives that we're looking in 1A, 1B. So 1A and 1B are more direct, more targeted. 1C and 1D are looking at the broader landscape and broader competition risks. Coming to 1A particularly, this idea that was targeted at entrant generation, we're very clear about the broader outcome that we're trying to achieve, which is more generation and more competition within that generation. When we were discussing this as a task force in August, we had a view that there would be potential value in supporting entrant generation by making firming more available to them, with a view to then better enabling PPAs and the revenue from streams from PPAs then better enable construction finance for new generation. So that was the thinking behind this. But as you'll see from the working paper, what we've then tried to do is say, is that actually the best thing to do? If we want to efficiently support new generation into the market, is it more availability of firming? Are there other things that are getting in the way of PPAs? Indeed, is PPAs the right focus, or is there something else to focus on? So there's a range of potential options set out at the back of our working paper, very deliberately broad to ensure that everyone understood the potential things we could think of, the things that we could promote, and they could come back to us with a view saying, this is what we think is most useful, and this is why. This is where we see particular risks. This is something you should be wary of. So I can happily, genuinely say any consultation we put out there, we value the feedback. This one particularly, we're really looking for a steer from the sector about what would be most useful to help ensure that our decision making is as good and as targeted and as valuable as it possibly can be. None of us want to be in a situation where the authority's putting forward a code amendment and putting code in place that actually doesn't address the key issue or the key concern. So very much looking forward to hearing your questions and to then getting your written feedback. Particularly interested in any views that entrant generators or investors have around how they see the market, what they see as most important in terms of efficiently supporting them and then ultimately supporting a vibrant, competitive, efficient wholesale market in New Zealand. That's the initial intro I was wanting to give you. Before I hand over to Ross, though, really happy just to check whether there's anything in the chat or in the Q&A that you want to talk about in terms of that introduction. I will remain on the call, so really happy to take questions later as well. If there's something that you come up with during the session that you think is worth discussing at a framework point of view as opposed to a more specific what's in the working paper perspective. There's nothing in the Q&A at the moment, so Ross, I'm going to hand over to you at this point, and yeah, look forward to hearing the discussion later in the session.
Great, thanks Rob. Hopefully you can hear me fine as well. Just move to the next slide. So I have just 5 substantive slides to walk through. They're really just covering material that's in the working paper, but just putting it to you in a slightly different form, hoping that that helps anyone who's read the paper just to see things from another angle and help your understanding, and also just provides a platform for asking any questions, clarification questions you might have as we go through. Working through in a slightly different order from the paper itself, so I thought I'd start just talking about, there's a piece in the paper where we talk about, we thought it was useful to talk about generation entry fundamentals, so the way that things work in the New Zealand market. This is from page 17 of the working paper in a section that talks about system evolution. And this sort of market fundamentals piece is really relevant to any generation investment, whether there's a PPA involved or not. The same kind of basics are at play, and that is that we have essentially a market-led or a demand-led system in New Zealand with an energy-only wholesale price. And so when people are making decisions about investing in generation resources or batteries for that matter, then it's really about the expectations they have about where nodal prices will go in the future. That's the sort of fundamental way to understand whether the generation is worthwhile. And nodal pricing, as many of you will know, tends to reflect what the system conditions are in real time, but they also effectively tell you about the overall balance between demand growth and generation investment. And nodal prices and the shape of them and the risk around them inform how hedges are priced and how supply agreements are costed. So that's sort of the beating heart of the system, if you like. We just thought it was useful in the paper as well to talk about how, when you're thinking about generation expansion, it's useful to break nodal pricing down into these two components, which is to think about two different types of average price. So one is just the simple time-weighted average price. So that's without any fancy weighting. What is the average price that you expect to see in the system? And the other is the generation weighted average, which is for a given project that you're developing, what price do you expect to realise for that project? If you take the ratio between those two numbers, so the generation weighted over the time weighted, you get something which is sometimes called the capture rate. And that's a number that really distills just how well a given project targets times when electricity is of the most value. So there's an equilibrating process that happens through the capture rate, which is just useful to understand. And just to play that out in a simple example, if you build a lot of solar, then the solar capture rate will start to decline. That will start to make solar projects look less good than, say, wind projects. That ought to lead to more wind build until the wind capture rate starts to decline, the solar capture rate starts to improve, and investment sort of tilts back towards solar. So that kind of expectations that people have about how that will play out into the future kind of neatly helps drive the system towards a least cost expansion path as between different technology types, different locations, and also sort of gears the overall timing of when things get built. So we just thought it was useful to kind of put that view about how things play out in the paper, because that's the sort of fundamentals before you get to thinking about different revenue models or the effect that PPAs might have. And at one level, sort of if you take competition effects and decision dynamics out and you imagine everyone had perfect information, building a project through a PPA would just offset a project that might be built through some other revenue model, so that things would, again, just sort of equilibrate because they're all fundamentally driven by the same value stream. So that's slide one. I'll stop there in case anyone's got any questions sort of about the fundamentals. Cool. Alrighty, happy to move on to the next slide then. So this diagram isn't in the paper, but it was just a useful way to put some of the material that is covered in the paper. One of the things we did for the paper, I think it was probably the first time that the authority went into print talking a lot about what a PPA is in a New Zealand context. For the paper purposes, we had to say what do we think a PPA is. When we settled on the idea that we'll call it a PPA, or a power purchase agreement, if it's long term, I think 10 plus years, arguably a bit shorter can still be a PPA, but that kind of duration, offtake agreement with generation following output. So it's basically an agreement to buy all or some fixed portion of the output from a particular development. And so the key thing is the duration and its generation volume following. So you're just building the amount of energy that's produced from a particular plant, so linked to a particular plant. What this slide's doing is just sort of saying a PPA is just one way of structuring yourself if you're looking to invest in generation. At the top there, the sort of in some ways simplest thing to do is to build generation and simply sell it into the wholesale market, often called merchant or independent power producer setup. That produces a pretty uncertain, volatile revenue stream. And so often if somebody were to do that kind of revenue model, unless they had a very resilient balance sheet, they would have some sort of hedging to accompany their wholesale sales. So that's kind of model number one. In contrast to that model, PPA-based models have the advantage of giving a generator a more predictable, certain revenue, at least on a dollar per unit produced kind of basis. They're still, they can reach their own view about how much volume they're going to produce, but they get a long-term commitment to pay a particular price per unit that they produce. It really simplifies the revenue picture for a developer. And if the buyer of the PPA has good credit strength, and if the PPA is, I believe they usually are, is structured to sort of pass the benefit of that credit strength through the supplier, then PPAs tend to play an important role in helping developers access project financing at good rates. So that's kind of a key feature of why they're popular or successful, is that they help a developer secure finance at a rate that makes their project competitive. And that's particularly important for renewables, because renewables have low fuel costs or zero fuel costs. And so the financing cost is a big part that goes into the cost of the project. If you can get cheaper financing, you've got a more competitive project. It's more likely to earn enough to cover its costs. It's more likely to produce an attractive PPA price. The other model is to build yourself a retail book, which is to vertically integrate. Again, it's sort of another way of managing the risk on the offtake side, in contrast to just a single PPA kind of approach where you try and contractually reach through to some security from a large end user. Building a retail book helps you diversify your risk across a collection of buyers. Usually, if you're talking about an entrant or a challenger developer, they won't kind of come to New Zealand and immediately build themselves a generation portfolio that can cover, fully cover a retail book, or fully cover the needs of a PPA buyer even. So typically, either the generator or the person buying a PPA is going to need some sort of access to firming, because the PPA or the generation plant fundamentally isn't going to be enough to perfectly match the demand needs. So a common example or a typical example would be an end user buying a solar PPA, say, which meets some of their need, and then they have some residual non-PPA volume that they need to meet, which will be weighted towards non-sunlight hours, so weighted towards winter, weighted towards evenings, weighted towards cloudy days. And they might get a traditional sales agreement from a retailer to give them a fixed price for that volume, say. Alternatively, they might build some sort of hedge book themselves. And one of the things, I guess, that's important when we're looking at this is, from a competition point of view, thinking about the opportunities that the incumbent generators might have to influence entry via any of these models. And there's some sort of leverage there, no matter which way you go. So for merchant sales, if you're purely merchant, then there's no issue. But if you're needing to hedge to manage volatility, you'll be purchasing hedges likely from your competitors as you're entering. For a utility PPA, which is a PPA where the buyer is an incumbent utility, whether they're a generator retailer, or just a retailer, obviously you're directly selling your PPA to your competitor. So the incumbent has a choice about whether they buy the PPA or not, and a choice about the price they offer for a PPA. For corporate PPAs, that lets you effectively bypass any incumbent in terms of the PPA itself. You can sell a PPA directly to a major end user, but that end user is likely to have residual demand, and they'll likely need firming for that. And so the access to firming for that end user is the thing that might slow or stymie entry in that kind of scenario. And likewise with the retail book, generation retail, kind of bootstrapping in as a generator retailer from scratch, you're likely to need to hedge your retail book, unlikely to fully supply it yourself, certainly early on. So that's the second slide. Again, any questions at that point? Clarifications? Cool. Unless everyone's having any questions for the end, we're going to finish nice and early. Okay, we'll look at the next bit. Okay, so having looked at those two kind of context-setting bits, there's a piece that looks at what's the potential upside here, what's the prize, what are the benefits from intensifying competition that comes from PPAs. That's actually largely about competitive generation entry, but it's a bit broader than that as well. That's partly because PPAs are, in one part, they're a route to market for new generation, so they're an option for monetising new generation. But from a buyer's point of view, they're also an alternative way to procure energy. So PPAs offer the option for a buyer purchaser to deal directly with an entrant developer and to secure a long-term price. So it gives them a different kind of procurement option to what they might otherwise have available. And so that means that PPAs have the potential to intensify competition for generation entry and actually in the retail space, and in a sense just between different business models. So it's a model that competes with the independent business models or the vertically integrated business model. So it kind of competes across all of those dimensions. And then why might that be a good thing? So competition could lead to a few benefits. One of them is potentially around earlier generation expansion. And partly that's just competitive dynamics, so that there's more parties who might bring generation to market, then a sort of holding off strategy becomes a bit more risky because there are more parties who might come in and meet demand growth ahead of you. But also it's possible that the types of parties who are selling PPAs, or really the people who are buying PPAs who are sort of more in the driving seat, might be more inclined to err on the side of early rather than late when they're thinking about the timing of generation expansion. Because in a PPA, really that risk around being too early is largely transferred to the PPA buyer. PPA buyer, depending on how the PPA is repriced, but the PPA buyer is the one who carries the risk. They might regret having signed up to the price they did for the PPA if it turns out that actually we're moving into an oversupply. PPA buyers, being sort of industrials, might be less bothered by that risk than traditional players, including because oversupply helps reduce their residual price, and so the price for the residual volume. So that kind of dynamic is a little bit different for those people. So that's sort of one way in which intensifying competition through PPAs could be broadly beneficial. Another is just better projects, in the sense that this is not to say all PPA projects would be better by any means, but that the more parties you have working out projects or potential developments, the bigger the sort of pool you get, and the better the chance of discovering better projects. PPA developers potentially kind of look for different opportunities as well, and potentially leverage skills or connections or networks from other markets. PPA is often a route to investment for people who have come from offshore and have development expertise elsewhere, and to bring that to the New Zealand market. So again, that's another way in which you might discover or lift the quality of projects that are being built. Then there's the retail innovation side. So as talked about before, that PPAs are an alternative procurement option for large users. So that just expands the range of options around procurement and intensifies, creates a bit of pressure to innovate in that space. Enhances the retail landscape in a sense. And then lastly, I think one thing that happens with PPA development sometimes is they go hand in hand with load development. So a PPA proponent will often be looking for an increment of demand growth to match their project. So particularly sort of geographically flexible type projects like data centres can come hand in hand with PPA developments. Chicken and egg. So that's just a sort of a map of the logic of how you might get from more intense competition that involve PPAs might deliver a set of benefits. And those benefits are really all about amounts to better outcomes for consumers. That can be lower prices because things are built earlier and there's some better projects in there. It could be more reliability because things are built early, on average. So lower risk of encountering a tight period of undersupply. And it can be more choice, more services for buyers. Again, I'll pause for questions. All good. Move to the next slide then. So the next thing we had a look at in the paper was the question of why don't we see more PPAs in New Zealand? Effectively, what are the headwinds? And some of these are headwinds that are specific to PPAs. They're challenges around making a PPA work. And some of them are not. They're just general things that are difficult about generation investment. And all the things that are PPA specific, some of them are particularly harder in New Zealand perhaps, and others are just, they're always a PPA challenge no matter which market you're talking about. So we wanted to just sort of map that out. So just stepping through them, starting from the top left, the underlying need. Obviously that's a major factor. Going back to that first slide around the fundamentals and nodal price expectations, it's hard for anyone to invest in generation if you're not sure that it's needed. And in recent history, we've had a risk of Tiwai closure, we've had uncertainty around electrification and carbon policies, and those things would make it hard for a PPA developer as much as they'd make it hard for any other developer to take the plunge and risk that they might be building into an oversupplied market. So that's true for any developer, and in the PPA case, it's kind of true for PPA buyers effectively because they take on that risk. So then on that PPA buyer side, the second icon there, there's both the willingness or interest of PPA buyers, but also the suitability of PPA buyers. So on the willingness side, PPAs are fairly novel in New Zealand. People are getting used to what they are and that they're an option. And on the suitability side, I think as a PPA seller, it could probably feel like hard going trying to find a buyer who has the scale to buy a meaningful share of your output, who's interested, and who has the credit strength that's going to help you get a low cost of financing and make your project attractive. So the kind of pool of buyers, their scale and their interest, and finding those can be a challenge in any market. New Zealand's a particularly small market, and so particularly challenging here perhaps. And of course that goes the other way as well in terms of PPA supply. If you're a buyer looking to buy a PPA, you need to find a quality development. That means a developer who you think is credible, who you think is going to bring the product to generation to market on time, and who's got a project that's capable of delivering a competitive price. So again, the supply side can take time to build a pipeline of good PPA candidates. So those sort of three fundamental kind of challenges that sit down the side there. And then perhaps with more kind of relevance to a regulator as well are things that sit around market structure. First one of these is kind of interesting, which is that talked before about PPA as a way of trying to get a lower cost of finance, and you're trying to get a competitive cost of capital basically. You're competing against in the New Zealand market vertically integrated suppliers who, because that Entrant's corporate structure, because that business model mitigates risk pretty effectively, they have a pretty low cost of capital. So trying to bring a project to market that can compete with the vertically integrated players on a cost of capital point of view can be hard. And it was mentioned before, cost of capital is particularly important for renewable developments. And that's just sort of a feature of the market, I suppose, more than a problem. Second is foreclosure. So we talked before about the business models and the foreclosure opportunities that incumbents might have for somebody trying to bring a PPA to market. That's whether as a utility, for a utility PPA as a buyer, incumbent gentailers are great PPA buyers in a lot of senses. They have good credit strength. They can take care of their own firming and integrate a PPA into their own portfolio, so they're great buyers. But in that buyer position, they have a foreclosure opportunity in terms of whether they choose to buy or prefer to build their own. And in the corporate PPA space, that bypasses that issue, but any purchaser of a PPA needs to put together a deal with somebody to supply their residual demand. And so there's a foreclosure opportunity there as well. And then the last issue is around pricing, which is to sign up to a PPA, which is a big agreement. A PPA buyer wants to gain confidence that the total price they're paying between the PPA piece and whatever they're paying for their firming it stacks up against other procurement options. And they want to understand that, so typically the PPA duration might be quite long, might be say 10 years, it might have repricing in it, but the firming contracts would typically be shorter than 10 years. So a PPA buyer would want to understand that they're not signing up to a 10-year PPA and a 3-year supply agreement and not be confident that they're going to be able to renew the supply agreement for their residual demand at a competitive rate. So those kind of issues around seeing transparency of price levels to help you understand whether what you're getting is a reasonable price, and confidence around liquidity, so that you're confident you will be able to resupply your residual as through the life of the PPA. Those can be impediments to people signing up to a PPA, we understand. So that's that slide. Any questions? Okay. So we'll go to the last substantive slide then. So the last thing that paper does, and where it sort of closes out, is around looking at some potential options. So we've canvassed headwinds, and then we're looking at options that might mitigate those headwinds, reduce those headwinds in some way. There's 3 options that aren't on this slide that we thought of and then set aside. So they're all options that involve socialising risk in some way. So one of them is around socialising prudential risk, which is a thing you see in some other markets. Norway does a thing like that, which is to sort of address the credit strength of the purchasers by socialising the risk around the purchasers. The other one is to socialise the revenue risk for around the PPA, which is the kind of thing we see in the New South Wales market, for example, with the LTESA, which puts a floor on the revenue from a project. And the third one would be around socialising the risk around the cost of the firming, which would put a cap on the firming cost effectively. So all of those options all involve socialising risk some way. They all sort of run fairly counter to the fundamentals we talked about before, the kinds of options that were rejected by MDAG and the 100% renewables or highly renewable system work, and they're the kind of options that are fairly heavily discouraged by the government policy statement as well. So we've set those options aside. So we look at what's left and starting at the bottom. So the sort of at the mild end would be options around information and resources effectively. So we thought about templates, PPA template can just help reduce transaction costs to some extent and build awareness and work through some of the tricks of making a PPA work in the New Zealand market, some peculiarities of making it work in the New Zealand market. Demand information that is not demand so much, but the need, so supplying information around the need for new supply. And the last would be just other procurement resources, whether that's guidelines, models, whatever it might be. So the kind of mild end of the intervention spectrum, there's things of that nature. Stepping up to the next level, these are kind of commercial service options really. So one would be a kind of a matching service, a bulletin board style approach to help buyers and sellers find each other effectively. The other would be a pooling option, which is to aggregate, provide an aggregation service, group up potential buyers to make a viable amount of demand, or group up potential suppliers to make a viable amount of supply. Next up from that, we have something which is progressed through other competition task force measures around flex trading. So that's looking at, could involve, for example, looking at whether there are products beyond the new super peak that would be particularly useful to enabling people to conclude PPAs, or help PPA buyers to be confident around their firming, plus just the work around trying to push that market development along, push along trading and transparency of the super peak product and whatever other products, all with the aim of trying to help with price discovery and liquidity headwinds that we talked about before. Slightly more prosaically, and we're not too sure about this, but there might be tweaks that could be made somewhere around reconciliation, metering rules, for example, just to make the sleeving service a little easier. We didn't talk about sleeving yet, but in our lingo, we've thought about sleeving as being simply the retail service that a PPA buyer accesses that enables them to receive a separate price for their PPA volume versus the residual volume. And it might be there's something in the multiple trading relations type vein that could just make that a slightly easier service to provide. Not that it isn't being provided or able to be provided earlier, but already, but it could potentially be made slightly easier. Stepping up then in intensity, we have options in the space of regulatory scrutiny. So that could be scrutiny around pricing outcomes, which could be PPA pricing, or it could also be pricing around firming of PPAs. So scrutiny in that space would be one option. The other would be scrutiny around the process of acquiring PPA or PPA firming. So the timeliness, the terms on which things are offered, and like conceptually. And then finally, the option up the top there, stepping up intensity again in some ways, is the one that we started with in terms of the definition of 1A, which would be to, in some way, look at how you could ensure that firming resources are allocated to the job of firming PPAs to some extent. And there might be a variety of ways that such a thing could be done. That we haven't explored in any great detail in this working paper. We've just sort of taken it as far as identifying the broad options and making some preliminary introductory comments on each of the options, which is kind of where we want to hand over to you all. We would find lots of value in your submissions. So obviously first is all of the preceding, is that a useful way of framing everything? Have we thought through things well? Are we missing something? But then particularly in the option space, have we got the right set of options? Are there other options that we haven't thought of here that ought to be in the mix? And then we're really interested to hear about your views on the merits of any of these options. Are any of these options particularly able to make a difference, or is there some collection or cluster or group of those options that would be particularly impactful or helpful? Obviously also interested in the risks and downsides around the options as well to help us sort of choose from here which options might we take forward to the next stage. So questions, opportunity again.
Just to get the ball rolling on questions, is the task force considering progressing multiple of these options, or would you likely look at one? Do we have any view of that? What should submitters focus on in that aspect?
Yeah, I take it that wasn't your option, Campbell. That was that wasn't your question. So, yeah, so I think it's as the paper sort of says, and we just outlined, I think all of those things are possibilities. So the next step from here is a paper around April, most likely, that says, where to from here. That could be selecting the most impactful option and progressing it. That might involve a code change proposal, or it could involve, those aren't all kind of code change proposal options, or it might involve some sort of bundling up of them, or it might involve setting them all aside. So I think all of the options are available.
I would agree with that, Ross. I think that what we're really looking for is feedback on what's most useful and what's most urgent, and we'll look across both of those axes, and if that's more than one thing, that's more than one thing.
Yeah.
As a reminder, the next step is a paper in April.
Correct. Yes. So next slide. If we do next slides is so the working papers out there. You've had a couple of weeks to look at it already, I think. Submissions are due on Friday, 28th of February, so just under 2 weeks until submissions are due. As with all things task force, we're looking to move with pace. So the next step that we've signalled is to come back out in April with a where to from here, which might include a proposal if there's a code change option that kind of comes to the fore. We'd be aiming to get that out in April to support decision making on a June type of time frame. All going well. Now, if you would if you need some more help to get to running a submission and want more clarification offline, then by all means get in touch with us. Likewise, if you don't think you can put a written submission in, but you'd like to have a conversation, again, get in touch with us. Also, if you would like to make a submission but you want to include confidential information, that's fine too. You can do that. You just need to let us know that that's the case, and we won't publish that submission or that part of the submission.
One question come through. Do we have any more time to set up more detail about how some of the proposed solutions could work, especially those on the top right-hand corner of the solutions slides?
Top right.
Starting from the application.
Yeah. Well, we do have more time for sure, but I won't go past what we've discussed in the consultation paper, which is in itself really brief. I'll just talk about that briefly in terms of what's in the paper. So start with process scrutiny. What we've said in here is that could involve setting out some principles and requirements for dealings between incumbent generators and parties seeking access to sleeving or firming. So sleeving is those retail services. It's probably less important. The firming's really the more material piece. And I think to have scrutiny of a thing, you need some sort of principles, requirements. Dealings means we're talking about the kind of bilateral world here. So in contrast to the kind of flex trading of, don't know who you're buying from necessarily, you're just buying a product off an exchange. For process scrutiny, we're talking about an over-the-counter bilateral negotiation between two parties. And there's other examples of that kind of process scrutiny already that we point to. And one is the distributed generation access arrangements in Part 6, which set out some parameters around how distributors deal with somebody approaching them to get access for their generation project. So it can include, in that case, it includes things such as, look, if you have an inquiry, here's a time frame. Here are some, in the case of DG, some principles around the pricing. Here's some methods for resolving disputes. And again, in the DG example, distributed generation example, here's some sort of fee obligations, and here's some default terms. So all of those, conceptually, those kinds of things are the kinds of things that you might set up if you're trying to do some sort of process scrutiny. And there is already, I understand, a voluntary code of conduct for the counter participants, so it's not a vacuum, there's something there already, but obviously regulatory scrutiny would involve some sort of codification and then monitoring of performance against those obligations. That helps. I think pricing scrutiny then could operate without process scrutiny, or it could sit alongside it. And it could be around incumbents disclosing either, well, disclosing pricing, could involve disclosing pricing and the rationale for that pricing. It could cover pricing for deals that are concluded, but it could also include pricing for things that weren't taken up, so unaccepted pricing offers. And the disclosures could be confidential, just to the regulator, to help the regulator assess, gather evidence, understand, and also just sunlight can change behaviour. Or it could be for public disclosure. Public disclosure is tricky in this space because it is a space where people are competing against each other to bring generation to market. So disclosure can have, public disclosure can have pros and cons in that kind of space. But again, it sort of builds on, the authority already does some disclosure activities around hedges, but this might sort of expand the scope that covers and focus in on PPA related things. So
that's now a second question. Are you separately looking at mechanisms to encourage generators to participate? I don't know if that means participate in the consultation or participate in providing firming or providing PPAs. If you could clarify, Bridget. The latter, yeah, would be encouraging generators to participate in offering PPAs or firming.
Oh, and offering PPAs?
Or firming or...
Yeah.
There's incentive schemes that might look like capacity, perhaps.
Yeah, I mean, if you've got beyond what we've proposed here, obviously the allocators beyond incentives and into obligations. The scrutiny things, I think, create an incentive to make sure that you're behaving in a certain way, so to participate, to offer in a sense. Other ways to incentivise coming to the table. I'm not sure if you have ideas for other options, then absolutely put them to us.
Another question. It seems like the issues paper has identified the intervention proposed by the task force as the highest level of possible intervention. Is doing nothing an option?
Doing nothing is always an option. Yeah, and is it the highest level? It is in a sense. It's not a strict hierarchy that we've laid out in that little block of options. Obviously, it's a fairly stiff intervention to allocate volumes, and we need to work through how that would actually work and how that would look. So we did talk about in the paper, we talk about that option a little bit and some of the considerations that would go into an option like that. So we talk about effectively firming PPAs is a use to which firming resources can be put. So if you think of firming resources as the flexibility in a hydro lake or in a thermal plant or the like, or just the financial capacity of a large player, physical or financial underpinned by physical. That's a finite resource. It's got an opportunity cost whenever you put it to one thing. So if we require it to be put in some way, shape or form to firming residual demand for PPA buyers, there may be a misallocation risk there that we allocate it to our use when another use would be better. So that would be one of the key things to think through when designing such a thing. And that could look like, what could misallocation look like? That could have impacts on retail market competition, could have impacts on non-PPA generation development, could have impacts on system security. So it's a big intervention that you'd want to be really careful about.
I think just to pick up on the last sentence of Marianne's question, is doing nothing an option? Even if we don't do anything under this initiative, our view, which of course we're very open to feedback on, is that the standardised flexibility product that's been introduced, that is already doing something in terms of availability of shaped support. And the question for us is whether something more targeted or more specific to entrant generators is needed as well, or whether that shaped flexibility product is already substantially helping. So we feel like regardless something is being done, this is a more targeted question at a particular group of entrants.
So there's a question here, which I'll just read out, which is, are there any possible options that could be considered to create separate entities to hold the physical instruments of firming, such as hydro/thermal, or other mechanisms to separate energy supply and firming supply? We follow up recognising that hydropower tends to do both. It's an energy source and a firming source. And I think in a sense that sounds like a kind of structural intervention that's out of scope and probably more a thing to look at. The review that Frontier are doing is the kind of place where questions like that might be asked, I would say.
Also maybe 1D.
Yeah, and maybe to 1C, is it? So there is virtual disaggregation type things being looked at in another task force space, which is probably a better place to talk to.
Yes, I think you've actually covered that really well in terms of your response. Virtual disaggregation, as conceived of by MDAG in their December 2023 report, to some extent went down that path, noting that MDAG's view was that it was a very targeted solution. We are on track in terms of the papers that we said that we would publish at the end of February, and so there'll be an opportunity for people to provide some of that type of feedback to us in terms of what you think the option set should be in terms of any broader problems, issues, opportunities in relation to supply, noting that there are some things that are outside of what the authority can do within the code.
Okay, that might be us. I mentioned already the important thing is hopefully this has helped you understand the working paper and help with some clarification. If you can, we'd really love to see submissions come in at the end of next week. If you can't, then get in touch with us anyway if you'd just like to talk to us about whether it's a clarification issue or a review that you have, please get in touch. So this is your opportunity. All of the options are legitimately on the table. We are trying to understand which would make the most impact in a positive way. So please have us out with your submissions. Thank you.
Before we go, one more question come in. The most substantial proposal was firming allocation. What would that look like?
Firming allocation? Yeah, I talked about that a little bit at the end there, around the opportunity cost and the like. And we haven't in the paper spelled out what the mechanism for that might look like, but obviously it would need some sort of mechanism for taking that resource and making it available to support PPAs. Whether that's to support firming of residual demand for a party who's buying a PPA so that the PPA can happen, or whether it's firming to a PPA seller so that they can bundle that with their PPA, whatever it might be. It's a mechanism to ensure that that resource is made available for that use. You could imagine there might be multiple ways of doing such a thing. Okay. Right, thank you. I think that's us.